Hello and welcome to another video session being FX Trader. We want you to subscribe to our channel so that you get to see our videos, and those of you that have subscribed, we say a big thank you. And now we have over 1,000 subscribers. We appreciate you. You are encouraging us to do more videos, and we'll continue to do more videos on new strategies on how you can trade forex and volatility index. Okay, our videos, want you to like our videos. The likes also encourages us to do more. Okay, we want you to make comments. If you are not clear with any video, make comments, ask questions. We'll try as much as possible to answer your questions. And some of you have been requesting for videos. We'll try our possible best to continue with our research on how to satisfy you. Okay. We also want you to hit the notification button at the bottom of the video so that you get to see any new video that we release. You'll be the first to see the video. And we also have our website, www.binfxtrader.com. We would like you to go to the website to learn about other strategies we have published. It will be of benefit to you, and you will like it. Some of you don't understand English. Some of you don't understand the way I say, the way I give the explanation. But you can go to the website. You have the opportunity to translate to whatever text or language you want. We have a translator on the website. You can go to the website to learn more on our strategies. The website is www.binfxtrader.com. Okay, today we'll be looking at a strategy you can use to trade boom index or crash index. Boom index or crash index, these are indices that does not allow you to place stop loss. If you are trading boom index, if it is boom 1000 or boom 500, you cannot place stop loss in the direction against the spike. Okay, if boom index will spike upwards. Okay, so if you are trailing in if price is against your execution, and then you have a spike upwards when you are selling, you cannot place stop loss to stop the force of the price. It will trip your stop loss and still push your account into more negative more negative balance. Same thing with crash index. You cannot place stop loss against the spike. Crash index will spike downwards, and if it's spiking downwards, you cannot place stop loss that you want to stop the downward movement of price at any particular price point. It's going to blow your stop loss and push it further downwards. So it makes it much more technical for you to trade boom index or crash index compared to other volatility index. Okay, other volatility index like volatility 75 index, volatility 100 index, and others, and also step index, they do not the price does not move like that of boom and crash. There is no sudden price movement like we have in a boom and crash or range index. Okay, so we are looking at how you can trade boom. We have boom 500 on the chart. Okay, it's just an example. You can use the same method to trade crash 1000 or crash 500. You can use this very method to trade boom 1000. So, but we have boom 500 on the chart. Okay, this is a 5 minute chart. Okay, so I have the chart zoomed. It's zoomed to okay. Okay, this completely I zoomed out completely here. So I'll give it a level. Okay, I zoomed in to one level. Do you understand? I zoomed out completely as it is now. You can see it's much more tiny. It's tiny. The price is the blocks, the tiny. The candlesticks are very, very tiny to the limit. So I'll just give it just a little zoom so that I can see it much more clearer a bit. Okay, just once. Okay, so that's the setting for the zoom. But some of you will ask, what is the zoom level? The zoom level is just +1. Okay, if you have 0, 1, 2, 3, 4, so it's zoom level 1, not zoom level 0. This is 0. Now zoom level 1. Okay, that's the setting for the zoom level. Okay, all right. So now the way this strategy works is price will go towards the upper envelopes band. Like this, my upper envelope band area. Okay, that means we have force of price going upwards. Okay, force of price went upward towards this area. Okay, before coming down. Now gets to this moving average band. All right, and consolidates. Okay, so if you are going to sell, you allow the flag breakout. The flag, there is always at some point there will be a flag. At some point there will be a flag formation, just like you have around here. So you allow flag breakout and then you sell. You allow flag break, just like we have here. Flag breakout, then you sell. All right. And then now currently we have a flag. There's the price on 5 minutes time frame went towards the lower envelope band area, and it's currently up but forming like another flag. Okay, so at this point, it's going to buy. It's been buying. It bought up to this point and started to consolidate around the moving average band. Okay, so just prepare your mind that this is going to go up, and it's already showing some force and preparing to go up. If you look at the red moving average is also tilting upwards in line with the bullish flag. We are on the 5 minutes time frame, so you allow price to drop from the upper envelope band area. Okay, and as it drops to the moving average band, the moving average this is the 200 moving average band, it forms a flag, like you have a flag around here. Then break out of the flag, you enter your sell. Also break out of this flag, you ride with the buy. Okay, another way is when it gets to the upper band area, allow price to drop below this red moving average line. Once it drops below the red moving average line, you can sell towards the band, the 200 moving average band area. Okay, now before I go forward, let's look at the settings. Let's look at the indicator settings. We have fractals. I like to use fractals on my charts, okay, because fractals is a special indicator. It helps me to identify the point of price rejection on the chart, okay. Also help me to identify my resistance and support area where I have a collection of arrows pointing upward. I have 2 or 3 arrows pointing upward towards the level. At any point, I know that's my resistance. When I have the arrows pointing downward, like 2 or 3, almost on the same line, I know that's my support area. So I watch for such areas in future, so that I know that when price gets to that level again, it may be rejected. Okay, so that's fractals. The next indicator is moving average. Now the red line that goes along with the price on the charts, this red line, okay, this is my 13 MA. This red line is my 13 MA. Let's go back to the settings. So 13 simple moving average, apply to close, the color is red. All right, now the next indicator is 200 period moving average, smoothed, apply to high, and the color is blue. 200 SME, okay, but this time around is smoothed moving average and is applied to high. And the next moving average is 200 smoothed moving average applied to low. The initial one is high, this one is applied to high, this one is applied to high, but the next one is applied to low, and they are both smoothed. The first moving average is 13 simple moving average applied to close, but the following two are smoothed. One is high, 200, the other is low, 200, and the color is blue for the two. Now the last moving average is 200 smoothed applied to close, and color is red. All right, so these are the this moving average band is the 200. This is my 200. This is my 200 moving average. This is my 200 moving average. It's a band. Okay, so what I use the 200 moving average for is my trend identification, to know the trend. Okay, so when the 200 moving average bends downward, like we have, like it's bending downward there, I know it is a bearish trend. Okay, when it bends upward, like it's bending upward here, I know this is a bullish trend. Okay, so if it's tilting upward like we have around here, it's tilting upward here, I know this is a bullish trend. If it's tilting downward, as the case may be, any other, like it's trying to tilt downward here, I know this is a bearish trend. Okay, so let's continue with the settings. So I have envelopes, 50 period, shift is 0, deviation is 1.000, method is simple, apply to close, and the upper band is colored black, lower band is colored black. Okay, now this black line here is my envelope. Okay, the black line here, the black line that you see here is my envelope, upper band, and the lower one that you have here, the lower black band that you have here, is my lower band. Okay, now lastly, on the indicator settings, I have envelopes, 70 period. The initial one is 50 period, but this all remaining envelope is 70 period, and the deviation is 1.0. The method is simple, apply to close, and the upper band is colored red, the lower band is colored red. Now let's go to the chart. The envelopes will form our resistance area. Okay, so as price shifts, resistance shifts. Okay, the upper band of the two envelopes, the red and the black envelopes, forms our resistance area. The lower band of the two envelopes, the black and the red envelopes, forms our support. Okay, like you have our support shifting upwards, while the resistance also shifts upwards at this point. And inversely, we have the support shifting downwards, while the resistance shifting downwards at this point. Okay, so the strategy, the way it works further is when the red line, which is our 13 moving average, when it crosses down, you can sell confidently. All right, and when it crosses up, like you have here, you can confidently buy. All right, so when it crosses down, sell, crosses up, buy. So we are still on the boom 500. Like the red line here touches the 200 moving average band around here. It consolidates before crossing down, so you sell at this point. All right, you can see what's doing here. It crossed up here and it's consolidating, and I'm very certain it's gonna go up, so you buy. All right, now your support is when price gets towards the lower band. Okay, like we have around here, price gets towards the lower and start to go up. Okay, you have a support is formed around here. All right, same thing with resistance. Price has been going up and starts to drop. Resistance level is formed around here. Okay, support level is formed around here. All right, resistance is formed around here. Okay, support level formed around here. We are still on the 5-minute chart. Okay, resistance is formed around here. Now don't forget, these settings is just for the 5 minutes time frame. This particular setting is for the 5-minute time frame. Okay, so if you want to change time frames, they may become distorted. You may at some point you may not be able to see the price on the chart. Let's look at 1 hour time frame for instance. You can see becomes distorted. Look at what happened here. Distorted chart. Okay, it's still good around here. Okay, but becomes distorted. Okay, so these particular settings is for 5 minutes scalping. Okay, scalping of 5 minutes time frame becomes more elaborate, becomes more the view becomes better. You can see more clearly. Okay, so you can identify where you have your support formed, when you have your resistance formed. Okay, you can easily see when price starts to spike up. You can see price spiking up here and not even forming consolidation around the 200 moving average band and spikes up even above the upper envelope band before retreating and retracing downwards. Okay, and as it retraces downward, it leaves behind resistance area, and you can see what price did. Price went down. Okay, so there are some points where the upper envelope band will fall below the 200 moving average, like you have around here. The upper band is way above the upper band of the upper envelope band is below the 200 moving average. Here you anticipate end of trend, although it's a downward trend. The moment it falls, the moment the upper band drops below the 200 moving average, you anticipate a downward trend that is going to last for a while, more like a big trend. Okay, so at some point when the upper band crosses above the 200 moving average, that's the end of the downward trend. Okay, so that's basically what this strategy is all about. Remember, when the red line, which is your 13, crosses the 200 band, you sell. When it crosses it downward, you sell. When it crosses it upwards, like you have around here, you buy. You also monitor consolidation at the point of crossing. Okay, monitor consolidation. At times there will be consolidation, there will be a range. Okay, for price will continue upwards. But the most important thing is that price has formed resistance, and you can see it, visible resistance or support, visible support that you can see, for you to conclude that it's going to go up or go down. Like this, your support towards the lower band. The lower band is below this, support area. Lower band is below this support area, and you can see resistance towards the upper band. Our upper band, of course, is above this area. All right, so don't forget, it's a good strategy. You will like it. Look at what happened here. Our upper band crossed the 200 moving average around there to give a confirmation that the downward trend has come to an end. Okay, but let's look at where the downward trend started from. Look at these are upper band. These are upper band, and this is the 200 moving average. Okay, so it shows that it's a strong downtrend movement. Okay, so, and look at where the trend ended. Okay, before we started to have consolidation where price goes up, comes down, goes up, comes down, goes up, comes down. Okay, so that's basically how this strategy works. It's a very good strategy for bull and crash. If you want to trade the spike, like some of you say, how do I catch spike? You catch spike by allowing price to descend to the support. This is support. Okay, our lower envelope band is around here. Okay, and you see price trickling down towards the lower band. Okay, and all of a sudden price starts to, just a minute. Okay, let me go back to where I was. Okay, now look at these are lower envelope band. All right, and this is our support. Okay, support is formed towards the lower band. Okay, and you now see price trickling up towards the 200 moving average, and you also have a breakout. Like this is your high. Okay, you have a breakout of the high towards the 200 moving average band, then you can catch your spike. Okay, catch your spike for boom 500, and price of course spiked up. You can see the way it spiked up. At some point to range, at some point to retrace, but it keeps spiking. So for those of you that are looking for how to catch spike, when for boom 500, when support is formed, all right, when the price forms support towards the lower band area and starts to spike up, you can catch your spike. Okay, and the converse way, or the alternative way for crash 500, when price has formed resistance and drops towards the 200 band area, you can also catch your spike for crash 1000 of crash 500. But for this example, we are on a boom 500 charts, so you can use this to catch spike when price forms support. Like you have a support here, you can catch your spike. It will start to spike upwards. You can catch your spike. So for boom 500, 1000, you can catch spike when a support, like you have a support here. Support